Zach Bassett here with COS Accounting and Tax and the Compounding Interest podcast. We are going to talk about charitable lumping today. This is something that gets missed by almost all clients until they hear about it from me. Most accounting firms aren't doing it. I'm sure some of them will start doing it, but it's really important. It can save you a bunch of money, and I want as many people as possible to know about it, regardless of where you go for your taxes. So it is kind of just what it sounds like. You're going to lump your charitable contributions in specific years. So this kind of plays into a lot more in Utah or areas where people, give 10 or whatever percent to their church of their income. So tithing's a big one, but some people, there's a lot of other people that just do a lot of charity every year as well. So we're kind of speaking to those people right now. It needs to be, $5,000 or more a year before you really need to start worrying about this. But let's say that you made $200,000 and you do 10% of your income that you give to charity or a church. So you've got $20,000. You give that to the church and you're going, sweet, I'm going to get a tax break for this. Well, you're actually not really going to get one. If you've got a couple other things that you can itemize, then you might get a small deduction. But remember, everybody gets the $24,000 standard deduction if they are married. So this person's married and they gave $20,000. Well, they automatically get $24,000 for the standard deduction. So we're not even going to take that. We're going to take this. So what did giving the money to charity do for you? It didn't do anything for you for tax purposes. Obviously, you're probably going to get more blessings or whatever it is that you're looking for. That's what you're doing this for. But why not also get a tax break on it, right? So what I would say is don't pay in this $20,000 in 2020. Just skip that year. Skip that year, but put the 20 grand into an account, just like you were going to send it in for tithing or whatever it may be. Put it in that account so that you're not spending it. You've got it ready to go on January 1, 2021. You're going to put in the 20,000. And then let's say that year you made 300,000. So over the course of the rest of the year, you're going to put in the 30,000. So now you've got $50,000 charitable contribution. You could automatically take the 24,000, but of course you're going to take the higher number. So now you're getting $26,000 less of your income. So $26,000 less will be taxed. Whereas if you had done these in separate years, $20,000 the first year, $30,000 the second year, you would have $6,000 of your income not being taxed, additional by doing it that way. So now you are able to deduct $20,000 more than before. What kind of break might that get you? Well, if you're in the bracket this guy's probably in, making $200,000 and $300,000, you're probably saving with state taxes, around 20. Let's say even at 20%, that's still super good. It's probably more like 25, but you're going to save $5,200. So $5,200 in savings off of something that you didn't really do anything for. You just switched your timing of when you paid your tithing. You do that every other year. Just every other year you pay it in. I think there's some moral question there as to whether that's okay to wait and pay your tithing. But my whole thing is, they've got billions of dollars. I think it's okay if you let it help you a little bit. I'm not going to say I know, I don't know. But, in my opinion, it's perfectly fine. If you feel bad about it, pay him an extra $1,000 of your savings that you got. Now you have $4,200 that you saved. So that's it on this one. Just keep that in mind. anything that can be itemized can be done in this fashion if possible. But charitable is really the main area for doing that.